Hello, I'm Rachel. Welcome to this edition of the Hot Performer Show. In today's show, we're going to take a look at what made Brambles revise its profit guidance for financial year 2022. We'll also look at today's stock performance. Earlier today, Brambles reported it had upgraded sales, underlying profit and free cash flow guidance for financial year 2022 because of the success of the company's pricing and business efficiency initiatives. In addition, the company also reiterated its dividend forecast in the range of 40% to 60% of underlying profit. As a result, the share price rose almost 7% in early intraday trade today. The stock is currently trading at $10.64. Now, Brambles is an Australian company that specialises in the pooling of unit load equipment, pallets, crates and containers. It's a supply chain logistics company operating in more than 60 countries, primarily through the Cheap brand. Its financial year 2022 third quarter trading update, Brambles expected sales revenue growth of 8 to 9%, up from its earlier guidance of 6 to 8%. The underlying profit growth is anticipated to be in the range of 6 to 7%, up from the earlier guidance of 3 to 5%, including almost $50 million of short-term transformation costs. Free cash flow after dividends is expected to be a net outflow in the range of $300 to $350 million against the earlier guidance of $350 million. The company's sales revenue from continuing operations for the first 9 months of financial year 2022 rose 7% at actual forex rates on the prior corresponding period. Now, Brambles states that the group sales volumes were broadly in line. Let's take a look now at how Brambles responded to global supply chain disruption during the COVID-19 pandemic. Well, during the first half of 2022, global supply chains experienced significant disruptions associated with shipping delays, transport and raw material shortages due to the pandemic. The period also saw an increase in labour availability challenges and changes in demand due to the emergence of the Delta and Omicron variants of COVID-19. In its 2022 half-year ASX media release, Brambles states these shortages and disruptions resulted in record levels of input cost inflation and inefficiencies across the global supply chains. In response to these challenges and scarcity of critical inputs, manufacturers and retailers increased inventory levels to de-risk their supply chains. The supply chain dynamics and inflationary pressures Brambles reported in the first half of the year were further exacerbated in the third quarter by the conflict in Ukraine and Russia. Ongoing disruptions in global freight and lumber markets continue to impact the flow of goods across supply chains, resulting in higher costs across businesses. Now, commenting on the latest update, Brambles CEO Graham Chipchase said that this upgrade focuses on recovering the increased costs to serve and generating appropriate returns on capital investments needed to service their customers and support future growth. Brambles' on-market share buyback program was expected to be complete in 2022 with almost $120 million of the $2.4 billion on-market buyback remaining. Now let's take a look at Brambles' price and performance. On April the 21st, in the morning trading hours, Brambles shares were trading at $10.69. That was up 6.69%. Its shares have surged 9.87% on a monthly basis as of today. Talking about 6 months' performance, the shares of Brambles have surged 3.59%, while as on a year-to-date basis, shares have decreased by 0.56%. Today, the company stands with a market cap of $14.38 billion and has given an annual yield of 2.92%. Well, that's all for now from this edition of the Hot Performer Show. We hope you enjoyed the show on supply chain logistics service company Brambles. Stay watching Kalkine TV for all the latest market and business news. I'm Rachel, signing off for now.